Sports Lino Man Over Market. Today is November 10th, the day before Veterans Day, and this is the ES Morning Call. Okay, a lot of things going on in the world, and I know sometimes everything that we look at, we do the same thing, do monotonous planning and so on. But I think I stated this last week on one of the videos that I watched somebody on a video, not the person I watched last night, but anyway, I watched a video. And he said that the best trader is somebody who didn't graduate college and spent 20 years in the military. And the reason that they think that he's the best traders is that because they didn't graduate college, didn't go to college, they think that they're not very smart. And then because if they're not very smart, they went to the military. Not that the dumb people go to the military. Someone who didn't graduate college, went to the military, received the education, but also received the discipline to become a trader, right? So I know this is monotonous. If you're going to succeed at this and you get into our program, you're going to understand that you're going to learn to follow the rules. You're going to learn to follow preparation, all right? Because at the end of the day, this is what we do. We prepare. We prepare for the markets. And, it's not like if you're day trading, it's not like you got the long-term effect on the markets, right? So things that are in the news don't always affect you, but like things that are in the news right now that are affecting the market and the way it's trading. Okay. Number one. So the market has declined. We're going on our 5th day in a row, right? Futures, not cash, but we're looking at like a 5th day decline. We're in a trading range, which I'm going to show you, but in the news, they're already talking about Britain if they're gonna have a referendum to see if they're gonna stay in the EU, right? They're gonna have that by 2017. To me, that's a long way out, but it's already hitting the news, and people are talking about it and what the effect is and what it does to British politicians, and especially Cameron, and how he's gonna have to defend his government because, as you know, the British government can change every 6 months, could change every day. Anyway, so Portuguese and Spain right now, they are, now are they going to become the new Greece? Europe has a real problem with austerity. And the issue is that they really basically are socialist countries, or they have socialism, like we are moving towards it in this country when it comes to healthcare and other issues, right? And then here at home, McDonald's, Burger King, fast food restaurants, I'm hearing that they're threatening to do a slowdown. Fast food will become slow food and so on. Now, besides all these things, then you have what's going on in China. Today, in China is the biggest shopping day of the world. They call it, what's it called? Double 11, right? Right. Yeah, biggest shopping day in the world. We have a young lady from the University of Illinois, DePaul, internships with them. She's from China, and she's an extraordinary gifted person with mathematics and so on. So it's the biggest shopping day in the world. I mean, it dwarfs Black Friday? Black Monday? No, Black Friday here in Chicago. I don't know. The day after Thanksgiving, right? So I always miss that day because I go out that Wednesday night before Thanksgiving and have a few cocktails with guys that I've been doing it for 30 years. And then also we played the Turkey Bowl. I'm a ref more now. And then so on. So and then tomorrow the markets are closed. All right. And then Thursday there are a bunch of numbers, right? So we got to be able to, to take these things into effect. But the point is that the markets are going to move. And I think the number one thing that we have to look at right now is that we're in a trading range and we have some weak structure below, but it's not going to just drop there. Markets don't do that, So yesterday I talked about the imbalance, how I thought the TPO count was TPO counts on the sell side, and actually went to where we were projected, right? So show that how that's turned around today. But let's get to the charts, and if you have any questions. All right. Sorry, we lost signal for a little bit, but let's go to share the charts, and then we'll talk about what we, what you should be looking at. Okay. All right. So today, all right, not much news. It's already out. Okay. Okay. Import exports have come out already. NFIB, small business optimism. Red Book at 8:55. Wholesale trade 10 a.m. could move the market a little bit. And then we have a 4-week bill auction, 52, 10-year note, Charles. We have this on the website. Markets close tomorrow. Thursday, we have a whole bunch of things going on. We got mortgage applications, jobless claims, Bullard, Yellen, and Lacker speaking, Bloomberg Consumer Comfort, JOLTS, and more speaking. And then Friday's another big news day. So you have PPI, retail sales, business inventories, consumer sentiment, EI natural gas, and so on. So you got to kind of let that affect your trading and realize that those things, especially with the markets being closed tomorrow, are going to be important to keep an eye on, right? So we might be, I think it could be very busy today and get a two-sided trade today. And then because people are flattening out their positions and worried about what could happen on the day that the markets are closed. All right. So let's look at here. Oh, man. All right. So this is my SPX chart. All right. So we're basically, we've pulled back from trying to come up to these tops. I think that the market, is going to spend some time in here on the cash, right? They can spend some time in here between 21.20 and, right in here, 20.58. Now, remember, that puts us at a discount. And so we'll, of course, be lower than that, right? So that's one of the things that you got to keep in mind and always, keep these charts and look at it. I always look at this. Now I kind of look, we've got 1, 2, 3, 4, 5 lower days in a row. Okay. All right. We really haven't gone, we haven't, with the exception of yesterday, we had some little closes. And I think that the market is staying sort of in this range. I think we got to put some more time in here, right? Between, this says 2014.75. I'm calling for like right here, 2040 to 2040 half. I think we'll start consolidating in here before we make the next leg up. All right. So that's another important thing to look at. Okay. And so I look at the market sort of from a longer term perspective. I like to see what's going on from the issues of, how many lower closes we have and so on. How many times we get these kind of movements. All right. Well, we got 1, 2, 3. This was the big move down here. All right. So you can get some spike lows. So you got to kind of be prepared for what's going on a longer term frame. Okay. Longer time frame. I'm sorry. So now let's take a look at overnight action. All right. We got a Globex high of 2078.75. Okay. That still didn't go up high enough. That was basically the bottom of bracket B yesterday. Okay. So it was the low of the first 30-minute period of the day. Plus, we've now left these single prints up above here. Okay. All right. So, you know what I'm saying. We have to get above there to even, they'll probably get back to test that. I don't know if that's going to be today, but I don't care. I'm prepared up here with our bull bear zone, our pivots, to be able to change my opinion based on market movement, right? We're not trading on fundamentals, all right? I mean, if I had an inside edge on what news is going to come out, like China's cutting rates and things like that, it would be pretty amazing, right? Because then we'd never have a losing trade, all right? Like I used to say on the floor, right? If you want to never have a losing trade, if you show you a guy who's never had a losing trade, I'll show you a guy's going to get indicted because he's trading in front of all the customer orders, right? Sort of like the high frequency guys, right? All right. So we got a low here. Looks unfinished to me. Okay. 2065 half. All right. We've got, this was the afternoon low of 2065 and a quarter. And then yesterday we've got this now unfinished bottom at 2062. 2062. All right. All right. Like I said, I still think there's room down here. We got some single prints at 57 and a quarter down to 55 and a quarter. We've got unfinished bottom at 53, and then more single prints from 51 down to 48. So, if I scrolled over to the left, and that's the nice thing, I put these there and I scroll over, and you can see that there is weak structure down there, weak structure. And so I'm prepared, all right, for the market to move that direction, because I got my 5-minute pivot in a sell, all right? Okay, we're trading in the middle of value, so we're kind of like, stuck right here in the middle, all right? And we got value area high 2075 half, 2064 even, okay, is the bottom of value. And I am, basically, I'm going to be sitting on my hands until I see the first 30 minutes of the day, all right? I want the market to tell me which way, what kind of direction. We got the CCI gray, all right? We've got, this going from red to gray. It has not gone to green, all right? It's had some MACD and CCI movements, got to the oversold, and we've kind of backed off again, right? So these are the things that we're going to be putting out in the trading manual. How do you use these things? Take a look right here. This is the VWAP, right? Value weighted average price. All right, we're right back to that. These two lines, this red line and this green line, is one standard deviation. This is two standard deviations. Okay, so this is also going to be in the software. The dots are exhaustion dots. All right, and they are, we find that we've put over the years that we've programmed different things into the VWAP and the pivots that show people where momentum should stop, right? Momentum should stop. So, but remember, when someone tells you a market's overbought and oversold, doesn't really mean that they're overbought, oversold. It just means that you're at a price. I heard someone say the other day, you can never have a market that's overbought or oversold, right? So, I kind of see where they're going with that, because price just keeps going up if there's more buyers, right? So there will become a spot where price will stop because they run out of sellers, but doesn't mean that it's going to just turn around and go the other way. I mean, it just means that they haven't accepted the higher prices yet. All right. So this is what we're looking at for the day. Okay. Starting out with the 5-minute pivot right here, 2072 and a quarter. Okay. All right. Let's bring down the sisters. Okay. And here's the Russell. So we got the Russell in the buy. So I'm looking at the Russell going, all right. So this is already telling me that the markets are in conflict. So it's going to be a choppy trade. So I have to be careful about the way I'm going to be trading this morning, right? So when I look at these things, my trading methodology, and this is the thing about trading, you're going to find out that you're going to have to develop your own style. I can give you all the tools in the world, but you have to develop your own style, what you're comfortable with, right? I think that an important thing that what happens, and I'll talk about it when we stop sharing the charts, because I want you to pay attention here, but is that everybody has a different trading style and what they're comfortable with. So you take a look at here. Here's our pivot for the Russell at 1175.60. All right. And then I bring the Dow down, and I'm looking at the Dow, and the Dow also in a buy. Okay. And they're at 1161 or 11,617. It's a 5-minute pivot. But, let me, kind of tell you why I have these in there. So these are no different than what I put on the S&P chart, right? This is our bull bear zone for me in the Dow, and that's our point of control. And that's our point of control in bull bear zone. So what do we know about those two things? One, we know that the point of control is going to be a target. Okay. These two are already looking like they want to try to go up and test the bull bear zones up there. Right. Now I take a look at the Dow or the NASDAQ. I open this up. All right. And I'm looking, I go, all right, well, the NASDAQ and the S&Ps are in sells. All right. And their bull bear zone and point of control is up above, just like ours. Okay. So like I've said, I've got conflicting news. I look at things, am I trading them? No, but because to me, all right, if the ES is going to move in a drastic move like yesterday, right, they all have to be in agreement. They all have to be in agreement. It's not that it's not like these are not interconnected. So, when people ask me if I look at bonds, I look at other oil. I mean, oil was an influence on the stock market only because the oil stocks that were a big part and they were in everybody's portfolio when oil went from 100 to 50. The stock portfolios were getting whacked, right? So now, that's what had a big influence. Then, I thought about it last year and I kept saying, I think we're disconnected from oil right now, right? So those are the kind of things you got to keep looking at. And, because it becomes like, what's the flavor of the month that's really affecting the market, right? So to me, actually, fundamentally, I think the market's stronger. Fundamentally, I think we got some poor structure below, and they're going to go down and they're going to have to test the structure. But I can't keep selling in the wave of people that are buying, right? So I have to look at our indicators to sort of keep me on the right side of the market, right? So looking at gold, all right. So this was the chart that I told everybody, and I know we didn't. I said that the market had to hold 11,1360. We've gone down from 11,1360, right, to 1084. We haven't taken the lows out, but I think as soon as they make that rate hike, that's the last shoe to drop, I guess, right? So that will be the nail in the coffin for gold, all right? So I put that out, and I kept showing everybody that, and I actually was bullish gold, and it had nothing to do with inflation because I didn't think there is any inflation. It had nothing to do with supply because I've told you gold is a demand product. It has nothing to do with supply, and anybody who tells you that is full of is wrong. They don't understand what the function of the gold market is. All right. So you take a look at this, 4192. 4192 is where our day pivot in the oil is. And, this morning on Bloomberg, I'm watching the news and they're saying that the reports out of OPEC that they believe that the oil market is going to be overproducing for the next couple of years. There's going to be overproduction of oil. I'm sorry. I should have did the gold update for you. So we got the bull bear zone up here at 1092 half. All right. Gold is now, right, came back through it, 1090.20. Point of control, 1080.40, 1089.40, and then 1088.20. We're now trading below value. Okay, now trading below value. I think so. As long as I have my day pivot with gold, okay. And now you look at those bounces we're going to get. You're going to get the what do they call dead cat bounces, whatever. And you got a little bit of short cover and rally and so on. But I think you can be safe in selling the rallies in gold. The only thing that could derail it if the Fed changes their mind and we don't get the December thing, then you're going to see a big spike, right? Because there's a lot of shorts in this market thinking gold is going to 1,000. Same thing with oil. Oil has to do more with supply, right? So and consumption, right? So I think the issue is that the Saudis are putting a lot of pressure on production. They keep producing, and they're going to keep producing, and they're trying to scare off the American fractors from producing oil, right? So they're punishing us. They don't really like, they didn't like the Iran deal. They didn't like certain ways that we meddle in the Middle East, okay? And also, the strong dollar is killing the Saudis because of oil petrodollars, right? So I think that's these are things that you think about, but you can only think about them in a frame of reference in a long-term sense, right? So actually until it takes out that 4193, gold has a chance to go up and fill the gap up at $55, $56. But I don't know. I mean, it's just the news that's out there and the political climate is telling me, and all the other commodities and slowdowns and overproduction, is that I think that oil is going to be heading the other direction. Okay. And then last but not least, we got bonds. really hard market to trade. I mean, it's a hard market to trade because, I mean, they're so news driven, affected by the Fed. It's been it's a one-way market. I mean, it kept getting to zero, and that's where we're at. So sort of staying right in the middle of value right now. The long-term chart has gone to a sell. All right, we got the bull bear zone here at 51.28, 52.15, 51.22, and then 52. Look, if the Fed decides that they're going ahead with the rate cut, you're going to see the bonds down at 148 and lower, and then you're gonna the rate hike. I'm sorry, and then that's what's going to happen, right? So that kind of covers the markets for this morning. Let me stop sharing the screen and talk to you about a little bit about any other questions out there, Anthony? Any questions? All right. Okay. All right. So here's the other issue, right? So even though when we go into the program, all right, and we start giving you our methodologies and things that we are, this is time tested. We've been doing this for 30 years, right? And electronically, we've been ahead of the curve. Even when I was on the floor back in '98, I had already started the electronic process up in my office with traders that I was backing. So at the end of the day, you're going to have to decide what kind of trader you want to be. So there's a lot of people, and this is this is what happens with professional traders, right? As soon as they learn the idea of shorting the market, everyone kind of believes that the market goes down faster than it goes up, right? So a lot of the professional traders on the floor did not know what the buy side of their card was, their trading card, until they had to cover a short position. And I think that one of the things that made me a better trader was that it doesn't matter to me. I'm going to trade both sides of the market, and I can be comfortable with both sides because I don't really believe the markets go down faster than they go up and get caught. And, if you think about this, think about when on August 24th, when the markets locked down and the circuit breakers went into effect. All right. I bought that effect. I bought that market down. And before I even put it in, it hit electronically, the market was, 2,000 points higher. So at the end of the day, you got to be able to trade both sides of the market. But if you're not comfortable being long and you're not comfortable being short, then you need to just look for your setups that will make you a better trader, right? At the end of the day, it's about how do I become a better trader and stay comfortable with the way I trade. So that's the important thing. And these are the things that you're going to learn with us. And then you stay with us, we're going to keep you, keep the mental side. I always say that 90% of trading is, 20% is preparation. All right. And then 80% of it is how you interpret the preparation and how you keep your mind clear and trade sort of emotionalism. But I mean, how do you get unemotional about money, right? So, all right, everybody, remember, market's closed tomorrow. I think we're going to get some heavy action, and then the market could, peter out by the end of the day. And then we have big news on Thursday, big news on Friday. So we'll be ready for you back on those days. All right, so everybody have a good day trading. And remember, always put the market on the green side of your card, right? We want to end up green, not the buy side, but let's end up making money every day. All right. Talk to you later, and good luck.